Welcome back to Alpha Recap, energetic market recap from stockalpha.ai. Markets closed for the day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today was one of those tapes where the headlines did the heavy lifting. Big moves in streaming and tech, but some surprising pockets of strength elsewhere.
Let's start with the scoreboard. The S&P 500 exchange-traded fund finished down about 0.75%. The Nasdaq 100 exchange-traded fund was hit harder, down about 1.4%. Meanwhile, the Russell 2000 exchange-traded fund actually closed up about 0.3%.
So, that was the neat little divergence. Tech and mega-cap growth got marked down, while small caps and certain cyclicals found buyers.
Yeah, that tracks. The dominant narrative today was a tech-led pullback, sparked by a couple of big headlines, and rotation into defense, industrials, and parts of renewables. Breadth softened because the mega-caps underperformed, but the small-cap gain shows there was still risk appetite under the hood.
Quick reactions. Wow.
Let's dig into the main drivers. The biggest single headline was Netflix. After earnings and less than encouraging subscriber commentary, Netflix experienced a massive move relative to its 200-day moving average, a 45% gap that really shook sentiment in media and streaming.
That 45% gap was the number that really caught our eye, and it immediately rippled through the communication services and software names that sit in that growth bucket.
Exactly. When a big, high-profile name like Netflix gaps that far versus its long-term trend, it forces people to reprice not just that stock, but comparable business models. Subscription businesses, ad-reliant content plays, that whole area.
I mean, when you step back and look at this, it's a reminder that sentiment in content and subscriptions can flip fast on forward guidance. Analysts were quick to point that out today.
Another headline that amplified the risk-off tone was renewed regulatory scrutiny on crypto. Reports suggested regulators were turning up the heat, and anything tied to digital assets, exchanges, blockchain-adjacent equities, took a hit.
Right. And the other thing is crypto headlines tend to make growthier, less profitable names feel riskier because they're already priced for long-term optionality. So a regulatory scare can cascade into a wider sell-off.
At the same time, there was rotation into defense and industrials, which was one of today's constructive stories. A defense-related contract news flow lifted suppliers and some prime contractors.
Yeah, industrials and manufacturing saw real strength. It was neat to watch money move from headline-sensitive tech into more concrete, cash flow-driven sectors for a bit.
Tech and communication services were the worst performers of the day. The Nasdaq 100's larger drop highlighted concentration risk. A few big names drove the action.
Not great for streaming.
Exactly. Consumer discretionary and media underperformed largely because of that Netflix shock. Analysts said it's a reminder about valuation sensitivity in the subscription space.
Meanwhile, utilities with renewables exposure and some materials and mining names outperformed. Clean energy project wins and policy tailwinds helped those utility stocks hold up better than the broad market.
We should call out specific movers so listeners have context. Netflix, the streaming giant, was the headline culprit. Tesla stayed under pressure, stuck in a downtrend near $380, which kept stress on EV suppliers and related auto tech names.
And then in smaller names, Siren Biotechnology got an $8 million grant, and Fibro Biologics completed a $3 million private placement. Little microcap stories that can trade independently of the tape.
Also, routine Form 4 filings showed insiders at FedEx and at JP Chase were active. Nothing market-moving, but worth watching for color on corporate behavior.
Short reactions. Interesting rotation.
Let's make a quick stop on technicals and breadth. The day looked like classic distribution in mega-cap tech. Heavy selling and volume spikes on the downside. But the Russell 2000's small gain suggests breadth below the mega-caps was serviceable. Rotation into cyclicals and defense offset some headline selling.
Traders should remember that after a sharp single stock move, like the one we saw on Netflix, implied volatility and correlation often spike and can make index option markets jumpier.
On macro and Fed implications, there wasn't a policy decision today, but the tape behaved like we're still in a higher for longer Fed narrative. Analysts pointed to inflation prints and labor data as the next big influences on rate expectations.
If inflation or jobs data looks stickier than expected, that keeps a higher discount rate on long-duration growth names, meaning those expensive tech stories feel the heat more than steady, cash flow-oriented sectors.
And don't forget Treasury yields. If yields move higher on safe haven selling or term premium shifts, that's another pressure point for high multiple stocks. Conversely, a flight to safety that compresses yields could favor defensive and dividend-oriented names.
Quick filler. Honestly, I was a bit surprised by this one.
How should listeners think about what comes next? First, watch how tech digests today's shock. A technical bounce in large cap tech could stabilize the indices. Persistent selling would widen the leadership vacuum and keep the market more fragmented.
Second, keep an eye on small cap leadership. The Russell 2000 gain suggests there are buyers for cyclical rotation. If that continues, we could see leadership broaden, which typically calms headline-driven volatility.
Third, monitor crypto regulatory headlines. Any escalation will likely keep pressure on crypto-adjacent equities. That's been a recurrent theme this week.
And finally, upcoming corporate earnings and guidance matter more than ever. Companies that provide forward-looking clarity may fare better in this environment where policy uncertainty is elevated.
Let's be explicit on the strategy lens, informational only. Analysts noted that today's contrast between a tech-led pullback and small-cap gains underscores the importance of diversification across sectors and factors. For active managers, idiosyncratic opportunities often appear in environments like this. Think defense, renewables, materials. But again, informational, not advice. 3 quick takeaways for listeners to remember from today.
1. The market closed mixed to negative. The S&P 500 exchange-traded fund down about 0.75%. The NASDAQ 100 exchange-traded fund down about 1.4%. And the Russell 2000 exchange-traded fund up about 0.3%.
2. The Netflix shock and renewed crypto regulatory headlines catalyzed a tech-led sell-off, while defense, industrials, and renewables offered pockets of strength.
3. Fed-driven rate expectations and upcoming macro prints will likely determine whether this was just short-term repricing or the start of a broader rotation away from high multiple growth.
Short reactions. Okay, solid summary.
Final note, if you're tracking volatility, analysts expect implied volatility and correlations to rise after big single-stock shocks. That's something option traders and risk managers will be watching closely.
All right, that wraps our market recap for the day. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next session with more color and takeaways. Stay curious and stay diversified.
Catch you next time on Alpha Recap.